The trade and tariff policies implemented during Donald Trump's presidency have sparked intense debate among economists, policymakers, and global leaders. While the Trump administration argued that these measures were necessary to address market failures and protect American industries, critics claim they have eroded international trust and disrupted global trade dynamics. Here's a deeper analysis of the situation. The case for repairing market failures. The Trump administration justified its aggressive trade policies, including tariffs on steel, aluminum, and Chinese goods, as a way to correct unfair trade practices and protect domestic industries. According to Trump and his advisors, countries like China had long exploited global trade systems through practices such as intellectual property theft, forced technology transfers, and state subsidies to industries. By imposing tariffs, the administration aimed to level the playing field and bring manufacturing jobs back to the U.S. Proponents of these policies argue that they succeeded in certain areas. For example, the tariffs on Chinese goods pressured Beijing to engage in trade negotiations, leading to the Phase 1 trade deal in 2020. Additionally, some U.S. industries, such as steel and aluminum, saw temporary boosts in production and employment as a result of protectionist measures. Supporters also claim that the policies highlighted the need for reform in global trade systems, particularly within the World Trade Organization (WTO). The argument for eroding global trust. On the other hand, critics argue that Trump's trade and tariff policies damaged the United States' relationships with key allies and undermined global trust. By imposing tariffs on not only China but also on allies like Canada, the European Union, and Mexico, the administration alienated traditional trading partners. This approach led to retaliatory tariffs, trade wars, and a sense of unpredictability in international trade relations. Many experts believe that the tariffs ultimately hurt the U.S. economy more than they helped. For instance, the increased costs of imported goods led to higher prices for American consumers and businesses, particularly in industries reliant on steel and aluminum. Farmers also suffered as China and other countries retaliated with tariffs on U.S. agricultural exports, leading to significant losses in the agricultural sector. Moreover, the unilateral nature of Trump's trade policies raised concerns about the erosion of multilateralism. By bypassing international institutions like the WTO and pursuing a "America First" agenda, the U.S. risked weakening the global trade framework that had been built over decades. Critics argue that this approach not only damaged trust but also created uncertainty for businesses and investors worldwide. The long-term impact. The long-term effects of Trump's trade policies remain a topic of debate. While some argue that they brought attention to legitimate issues in global trade, others believe the costs outweighed the benefits. The Biden administration has taken a more diplomatic approach, working to rebuild alliances and address trade issues through multilateral cooperation. However, the legacy of Trump's tariffs continues to influence global trade dynamics. In conclusion, Trump's trade and tariff policies were a double-edged sword. While they aimed to address market failures and protect U.S. interests, they also strained international relationships and created economic uncertainties. Whether these policies ultimately repaired market flaws or eroded global trust depends on one's perspective, but their impact on the global trade landscape is undeniable.